Hey everyone, this is Champion Trader Kevin Davey, and here's what I'm doing for algo trading in February 2022. Let's get started. Okay, so I started this last month and I got a lot of good comments on it, so I decided to do another one for February. And I incorporated a lot of the comments that people made, especially about the background music. So you should like this one a lot better. So why don't you just hit the like button right now, and then I'll know that you guys are getting into this. Okay, so people are always asking me, hey, what do your equity curves look like for some of your algos? What's a typical equity curve look like? And that's what I decided to do, is share these. And I'll also talk about some of the portfolios and that type of thing as we go on. But here's a sample of 8 different equity curves that I'm currently trading. I just picked these strategies at random, and they're from my whole base of 34 strategies that I'm trading right now. They're all automated, they're all algos, there's no discretion involved with any of them. All of them were built with my strategy factory process, which is also the process I teach a lot of people. And for the most part, the charts are just shown with one contract the whole time, so there's no position sizing to them. I think one of the charts I'm showing has 3 contracts, but you'll see that. So like I said, 34 strategies that I'm currently trading as of February. These charts also have proper amounts for slippage and commission, and the way I divided the chart up, when I stop development of the system, that's all the white area. So that's walk forward out of sample testing, that's the white area, and then the light blue area is actually live real time. So some of the strategies you'll see have a year or two maybe of real-time performance. Other ones have years and years of it. So it kind of varies with the strategy. But here's all 8 of them. So here's strategy number 1. Here's strategy number 2. Here's strategy number 3. You can see it has a lot of real-time results with it. Here's strategy number 4. Here's strategy number 5. That goes back real-time to sometime in 2018. Here's strategy number 6. Here's strategy number 7. And here's strategy number 8. And this one too goes back quite a few years of real-time performance. So those are just examples of equity curves I create and equity curves I trade. And one thing to note is, they're not perfect looking. They all have flat periods. They all have drawdowns. That's important, because if you see something out there, a lot of people show these perfect looking equity curves. They usually can't be believed, so watch out for that. And now some of these strategies you can see are always in the market. That's when they're jittering around. And some have these periods where nothing's happening. Some aren't in the market all that much at all. It depends on the strategy. And it's always a good idea to have a good mix in what you're doing. But like I said, the strategies are far from perfect, because I always get comments and emails that people say, hey, I've seen your back test, I can do a lot better. And you know what? I agree. 100% agree. The back tests usually don't look that great, and of course, you could spend some time and make the back test better, but you have to remember that's not the goal here. A lot of people think making a great back test is the goal, because that's the only thing they can control. But really, what really matters is real-time performance. And it's risk-adjusted performance. It's not just profit. It also includes drawdowns. It's the risk to return. What can you do in real time? And that's what my process of building strategies helps you do, is build better real-time risk-adjusted performance strategies. Okay, so when you look at the whole portfolio before I add any position sizing, what does it look like? Well, here's some hypothetical performance for about the past 10 years and on the left, and then the past year or so on the right. And you can see there's definitely periods of drawdown, so it's far from perfect, but overall the curves are pretty decent. And then when you break it down by sector, somebody had asked in the last video if I could break it down by sector. The basic sectors in futures markets are interest rates, currencies, metals, energies, stocks, and then Ags. I also put softs in there. Some people break those up separately. Some people put the meat separately. You could do a lot of different things, but you can see all of them pretty much have been profitable. Currencies really haven't done too much. I just don't have that many currency strategies right now, which I'll show you in a second. And then the big hitters for me are energies and Ags and softs. Those contribute a lot more profit. Then you have metals, but then towards the lower end you have interest rates and stocks. And you might say, well wait, but the stock market's been going up. Part of what I do when I'm picking strategies to put in this portfolio is I'm a little biased against stock index strategies. Why? Well, I look at my whole portfolio with, and that means things I'm not actively trading in futures, so like retirement funds that are in the stock market. And I try to make a balance between them. I don't want everything in stocks. I try to have a balance, and this helps me do that. And then when you break it down by sector, you can see about a third of my strategies that I'm currently trading are in the softs and Ags, and then metals, energies, interest rates, and then stock indices and currencies. So interest rates, stock indices, and currencies all show the lowest profit, but they're also the lowest weighting. Altogether, they're about a quarter of the portfolio. So that's kind of why it looks the way it does. So to do this and to do the portfolio part, I use an approach I teach in my Platinum Strategy Factory workshop. And the basic idea is you trade the best performing strategies, you trade uncorrelated strategies as much as you possibly can, and you try to be as diversified in different sectors as you can. It's not necessarily enough to just say, well, hey, I have a crude oil strategy and I have a heating oil strategy, and those are uncorrelated, so that's good enough. Because if some major event happens, guess what? That crude oil and that heating oil, they will become correlated, even on a temporary basis, and that might bite you. So it's good to be in all those different sectors that I mentioned. And even then, sometimes with some world events, you might get correlation when you normally wouldn't, but at least that kind of minimizes it a little bit. I adjust all these strategies monthly, so if you remember last month, I was trading a few more strategies, so some have dropped off, some new ones have come on. That's what I do every month. I keep adjusting it. So one question people always have, well, okay, that's you. All right, you've been doing it for years. Yeah, okay, great. Does this work for others? And in a word, yes. This is an example. I have a club that's part of my Strategy Factory workshop where the student traders can submit strategies. I watch them in real time. This was the club contest that just ended at the end of January, and 12 strategies that people had submitted passed a 6-month real-time test. So I'm watching them real time to make sure they keep performing and produce profit. And if you were part of the Strategy Factory Club and you passed one of these strategies, you'd actually get the code for all these. This is a pretty neat club. Here's just 2 of the student strategies. And you can see, obviously, since it's only a 6-month test, there's not as much blue data, but it gives you a good idea of the kind of strategies that students build. So all these were developed using my approach that I teach. And for those 12 strategies, the average profit over that 6-month real-time test was almost $6,000 per strategy. So those strategies did pretty well in real time. And that's what you're looking for when you build algos, right? And to date, since I started running the Strategy Factory Club, we have had 460 strategies just like that. And if you're part of the club, there's a chance that you have to actually get access to those strategies. You can learn more about this by clicking on the workshop link at my website, kjtradingsystems.com. I'll also put a link in the description so you can just click it really quick. So a final note, I update these strategies every month. And sometimes I make adjustments mid-month, so I just wanted to warn people that if you think, oh, hey, he's trading a lot of energies right now, that's what I should do. That might change mid-month, so I won't be doing another video on this until next month, but things might change. And I'm not suggesting any markets, any particular algos with this video. This just shows you what I'm doing, just to give you an idea of what a typical algo trader does. At least I think I'm typical. I don't know if I am or not. But anyways, you should be developing your own strategies and building your own portfolio. That's the best way to do it. Sure, you can use other people's strategies to help build your own, but eventually you want to learn to build your own strategies. Okay, well, if you like this video, please leave a comment. What else would you like to see? What don't you like seeing here? How can I make this better? I want to make this informative for people, so please leave a comment. If you liked it, give it a thumbs up. That'll keep me making them more and more every month. If everybody says, oh, I hate this, I'm not going to do it anymore, right? No, that would be silly. And if you really like my videos, make sure to check out all the other ones by subscribing to my channel. I'm Champion Trader Kevin Davey. Have a great day.